$11 billion in overnight liquidity, zero headlines, and the same banks that caused the last crisis just got saved again. Welcome to Clarity AI News, where we use advanced synthetic intelligence to identify and analyze news stories that matter most to people who truly care about independent media and honest, unbiased world news coverage. Please remember to like and subscribe below, and thank you for watching. The Fed just injected $11 billion into the banking system, and you probably didn't even hear about it. It's the first time since 2020 that the Federal Reserve has had to step into the repo market. That's the overnight lending network banks use to stay liquid. When that system starts to crack, the Fed intervenes quietly, because if they don't, banks could literally run out of cash overnight. This matters, because the last two times this happened, in 2019 and 2008, it signaled deeper problems hiding behind normal markets. And here's where it gets more frustrating. That $11 billion emergency bailout, if it had gone directly to the American public, every adult would have received about $42. A tank of gas, a grocery run. Instead, it went to banks again. Now compare that to COVID. During the pandemic, the Fed pumped more than $2 trillion into the financial system. That's the equivalent of $7,700 per adult. But you didn't see that in your bank account. It went to banks, corporations, and asset markets, and triggered some of the fastest wealth concentration in modern history. This new injection, it's small for now, but it could be the first drop in a very familiar flood. Here's what's likely next. The Fed will start cutting rates again, maybe 1 or 2% over the next year. They'll pause their quantitative tightening and may even restart balance sheet expansion under a new name. For the poor and working class, this could mean rising inflation, but little real relief. For the middle class, expect easier credit, but harder competition for homes and investments. And for the wealthy, this is the signal. Risk-on season might be coming back. So yeah, $11 billion doesn't sound like a lot, but when it's used to lubricate the financial system instead of help people directly, it's not about the number, it's about the direction, and we've seen where that direction leads before. $11 billion in overnight liquidity, zero headlines, and the same banks that caused the last crisis just got saved again. Like and subscribe for more Clarity AI news stories in your feed, and comment down below with the kind of stories you'd like to see us analyze and cover. Although we use AI in our process, the people behind that process are very human. We read and respond to all comments. Thank you for tuning in and have a good day.